Hi everyone. Last week the S&P 500 index closed down for the fifth consecutive week, which is a pretty rare occurrence, as you might imagine. In fact, it's the first time since 2011 and only the 14th time since 1980. You can see here I tweeted this signal test, which shows what happens of those 14 occasions after 5 consecutive weeks down. So I thought I'd show you how you can do that in Optuma using the signal testing module. So let's open up a chart of a weekly S&P 500. We have a tool called Days Down, and that calculates consecutive lower closes. So DD is the shortcut. We also have Days Up as well. It's a separate tool, but that does the opposite. It counts consecutive higher closes. Now it can also count not just closing prices, but any tool or indicator such as volume, consecutive relative strength, higher values, things like that. But we're just going to use DD for days down, and you can see it plots underneath the chart. Now this is a weekly chart, so in fact it's not days down, it's weeks down. So that's why it's showing up at 6 at the moment. If I show in price scale, that's because this is the 6th week that the SPX is lower. Now I'm recording this Friday morning, so unless the index rallies 5% today, which I don't think it's going to do, then this will be the 6th consecutive week that the index has been lower. And if we scroll back, you can see when that last happened was 2011, the same time that it was 5 weeks down, and then before that 2008. Now we can highlight all those events on a chart using the show bar tool. So if I apply that, by default it uses the default formula, so you get all those little arrows, just close greater than open. But we can use the DD function, days down, and then we need to set a true false condition, so where days down equals 5. So whenever that value is true, it places a little arrow. So I'm going to change the show bar actually from an arrow to a line, just so it's easier to see. As we scroll back, these are all the occasions when the index closed at least 5 consecutive weeks lower. Now we can use that formula, DD equals 5, in a signal test. Now the signal test module, it's available for all clients with enterprise services subscription or with the optional add-on module. So if you click on searches and you don't see Signal and Trade Tester, then you don't have access to it. So you can contact support if you want to give it a go, and we'll answer any questions you have. But I'm going to select Signal Test, and I'm going to create a new item, and I'm just going to call it 5 weeks down. And then the entry criteria is the same as the show bar. So DD equals, oops, I need the parentheses, equals 5. Now we need 2 equal signs, because if you just use one, it thinks it's creating a variable in the scripting language, but double equals signifies equality. So that's why we need 2 of those. So the code we want to test on is SPX in world indices, date range. Let's do everything. Now this is the key thing. Even though it's days down, we want to select time frame to week. So now it's going to count 5 weeks down. It's really 5 bars. So whatever time frame the DD function is set to, we'll count the consecutive downs. So let's do 5 weeks before and then 52 weeks after. And that's it. We're just going to click the test trade. And since 1953, there's been 29 events. You can see these are the 5 weeks leading in So obviously, because each week has been lower, on average, you can see it's 7.4% drop over those 5 down weeks, and then it's remained pretty flat until actually we can drag that vertical line, and you'll see the statistics box tells you all the everything you need about mean returns and probability of gains for each week. So it goes flat and even drops down for the first 6 months. So 26 weeks is about half a year. You can see it then starts to the returns start to turn positive. So at the end of 52 weeks, there's a mean return of 8.8% on average for those 29 events. So I hope you found that helpful. Don't forget, if you're on Twitter, follow us at Optuma, and you'll see examples of charts and statistics and things you can do with the software there. Thanks very much. If you have any questions, please let us know. Bye for now.